Welcome back to your Skift Daily Briefing. I'm Sarah Dandashy, the newest voice here and one of the co-hosts of Good Morning Hospitality. This week marks another big change. We are going visual. So every week, I'll be bringing you the Skift Daily Briefing in video format, so you can stay on top of what's shaping the business of travel with just a little bit more connection behind the headlines. So with all that housekeeping aside, let's get into it. It is Friday, October 31st, and here's what shaped the business of travel this week. If you still think hotel pricing is all about heads and beds, think again. Gone are the days of gut instinct and Excel spreadsheets. Hotels are finally, and I mean finally, turning pricing into a science. The $340 billion U.S. hotel industry is leaning in on AI and algorithms that adjust rates pretty much like how a baseball coach rotates pitchers based on demand and competition. Now, it's not just about occupancy anymore. It's about profit per guest. Hotels might drop rates, for example, if they know that a guest will spend more at the bar or at the spa, and this is a huge shift and change for the industry. Now, why are we doing this? Well, since 2018, rates are up 23%. But here's the kicker. Inflation is up 28%. So brands like Marriott, IHG, and Wyndham are investing heavily in smarter systems to protect profits. So what's the takeaway? Well, pricing isn't about guesswork anymore. It's data-driven, predictive, and built to squeeze every ounce of value from a stay. Booking Holdings just took a $457 million write-down on Kayak, and CEO Steve Hafner says the culprit is, drumroll please, Google. Well, as Google leans harder into AI-driven search, companies like Kayak, Trivago, and TripAdvisor are seeing fewer free clicks and paying more to stay visible. Hafner calls it a nothing burger, but it is an expensive one. Google later highlighted Kayak as a success story for its AI Max ad tools, claiming a 12% boost in conversion. So yes, Google's taking more ad dollars, but it's also delivering results. So either way, visibility in travel just got a whole lot pricier. And finally, Navan, formerly TripActions, officially priced its IPO at $25 a share, and it hit the Nasdaq yesterday. The move could raise about $700 million to fuel more tech acquisitions and debt repayment. Navan's now serving clients like OpenAI and Unilever, cutting booking times down to just 7 minutes. This is from the 45-minute industry norm, which is huge. Now, revenue grew about 33% to $537 million, and while it's still not profitable, the company's betting big on its tech as well as the timing. Well, that's it for today's briefing. For more insight into the business of travel, head to skift.com, and don't forget to subscribe to the Skift Daily newsletter at skift.com/daily. I'm Sarah Dandashy. Thanks so much for watching, and I will see you next week.